In this video, we're going to talk about high LVR, also commonly known as low equity or low deposit. When you buy a property, ideally you would have 20% deposit, but it doesn't mean that you can't buy a house without 20% deposit. You can, it's possible, it just gets a little bit harder. Banks are actually limited on how much they are allowed to lend in the high LVR space. They have what's called speed limits, and this is implemented by the Reserve Bank. The speed limit amount can change over time, but it's usually a small percent of their overall lending book. Because banks are limited in how much they can lend in that space, and because you're a higher credit risk because you have lower deposit, they're a bit more restrictive on their lending policy, and it's a bit more expensive. So some of the things that change when you fall into the high LVR bucket include, we may not be able to get you a pre-approval. When you're in the high LVR space, banks typically don't offer these, they sometimes do, but it usually needs to be a live deal, and that just means you need to work harder. You've got to do your due diligence first before the bank will consider you. Not all banks are open for business in the high LVR space. There are times, including at the time of recording this video, that some banks will not lend in the high LVR space at all. And they may lend in the high LVR space to their existing customers, but not to new customers. So it's definitely more restrictive. The banks are a bit more picky, and so we're limited in terms of the options that we've got on market. Your pricing is also usually impacted. Banks typically add what's called a low equity premium or a low equity margin, and this is usually added to your interest rate, which makes your overall interest rate more expensive than it would be if you had 20% deposit. Note though, you're not stuck with this low equity premium forever. As soon as the value of your debt is less than or equal to 80% of the value of the house, we can apply to get this low equity premium removed and get you back to the more competitive pricing landscape. When you're in the high LVR space, your affordability threshold is a little bit more restrictive as well. So when your deposit is less than 20%, you can borrow less than someone in exactly the same position has 20% deposit or more. These affordability thresholds move around quite a bit depending on the bank's appetite for lending in that space. So one week it might be really good and positive, and then the next week they could have turned it off completely. You also always need to get a valuation done. Valuations are mandatory when your LVR is over 80%, and so we just need to work through the timing of when you get this done, and it also depends on how the property is being sold. If it's going to auction, there's a lot to do there before you get to the auction room, including getting a valuation done. As a high LVR customer, you also have to show the bank that you have saved at least 5% of the overall deposit. And that can be through either your general savings account or through your KiwiSaver, or a combination of both. The bank wants to see that you're a good saver and that you are able to remain disciplined, and because your deposit's less than 20%, you're a bit more of a credit risk, and therefore they want to see that you've got the ability to save and remain disciplined. It's important to note though that new builds can be exempt from a lot of this high LVR criteria. You will still need to get a valuation done, but some of the other restrictive things that come around affordability thresholds, pricing, that can fall away when the property is a new build. So if you're interested in new builds, don't be afraid of buying with less than 20%, because your pricing and your terms are almost as good as if you had 20%.